Hey everyone, it is Julie here with TipRanks. Today we're taking a look at 3 stocks that score a perfect 10. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. I hope you had a great long weekend. Today we're taking a look at 3 stocks that score a 10 out of 10 on the TipRanks Smart Score. Now this Smart Score looks at 8 unique factors and measures a stock's likelihood to outperform the overall market. Not only do these stocks score a perfect 10, but they also come in with a strong buy consensus from Wall Street analysts. So today we're going to take a look at these companies, what it is that they do, and what those analysts are predicting for the stock's future. Just before we get into all of that, this is your friendly reminder that if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Now let's get right into our 3 10 out of 10 stocks. First on the list today, we're taking a look at Emerson Electric Company. They trade under the ticker EMR and are currently priced at $113 per share. Year to date, the stock has climbed over 17% and has gained 6.5% in the last 3 months. They score a 10 out of 10 on the TipRanks Smart Score with increased hedge fund activity, bullish blogger sentiment, and very positive crowd wisdom. Emerson Electric is a global technology and engineering company. With 74,000 employees, they help provide innovative solutions for the world's essential industries. Their portfolio includes automation, which helps customers develop solutions based on their industry experience, electronics manufacturing, where they provide equipment, hardware, and software for electronics component production, and industrial software, where they help industries achieve their sustainability and operational goals. They just reported their second quarter results on May 8th. The company came out with both an earnings and revenue beat, plus an update to their 2024 outlook. For their second quarter, Emerson Electric reported earnings per share of $1.36, beating expectations by 9 cents per share. Their revenue came in at $4.38 billion, which grew over 16% year over year and beat expectations by $90 million. Management said that they had outstanding execution in the second quarter, with sales growth, margin expansion, and earnings all exceeding expectations. Now looking at the year ahead, they're anticipating net sales growth of 11 to 12.5%. Emerson also has a long history of paying dividends. Notably, the company has been increasing their annual dividend for 28 consecutive years. Their most recent quarterly dividend was 52 cents per share for a dividend yield of 1.84% and a healthy payout ratio at about 40%. Following that recent earnings report, we did have several analysts weighing in. One of those is a 5-star analyst from Argus Research who reiterated their buy and increased their price target. They said that the company has shifted their focus in recent quarters, divesting legacy segments and investing in new businesses that target energy security and affordability, sustainability, and decarbonization. Over time, Emerson should be able to generate high single-digit earnings per share growth, driven by 3 to 4% revenue growth, margin improvement, and share buybacks. With 16 current analyst ratings, the Emerson stock comes in as a strong buy with 13 buys and 3 holds. The average price target comes in at $128 for an upside potential of about 14% from current prices. Looking at our ratings here down below, we do have a lot of 5-star analysts weighing in. On the low end, we do have our hold rating here with a downside of nearly 3%, and our high-end price target comes in at $140 for an upside of 23.6%. Second on our list today is Western Digital. They trade under the ticker WDC, currently priced at $75.58. Year to date, their stock has climbed over 44%, gaining 27% in just the last 3 months. Their 10 out of 10 TipRanks Smart Score comes with increased hedge fund activity, positive technicals, and very positive crowd wisdom. Western Digital specializes in memory storage. They offer memory solutions for every need, from small thumb drives to multi-terabyte backup memories and storage. Their product lines include PC hard drives, SSDs, memory cards, USB flash drives, and data center memory systems. Their products are found in a wide range of applications, but of particular interest in today's date, their memory products have found application in cloud computing and AI systems. These technologies lean heavily on high-speed computing, but also on increasingly large storage capacity. They shared their Q3 earnings report back on April 25th, where not only did they beat on revenue, but they had a pretty sizable earnings beat as well. Their third quarter earnings per share came in at 63 cents, which was well ahead of the 22 cents anticipated and grew an impressive 145% year over year. Their revenue also came in as a beat at $3.46 billion and grew 14% quarter over quarter. The company said that they're in the early innings of unlocking the full potential of this company as industry supply and demand dynamics continue to improve. They'll remain disciplined around their capital spending and focused on driving innovation and efficiency across the business. A 5-star analyst from Citi just initiated coverage on the stock with a buy a couple of weeks ago. They said following several quarters of storage digestion, capex cuts, and workforce reductions, the storage media industry dynamics should improve from here with the return of pent-up storage demand led by hyperscalers. Their positive view on Western Digital is based on a cyclical recovery in the storage industry, coupled with the company's exposure to both hard disk drive and solid state. Western Digital is rated a strong buy based on 17 current analysts with 13 buys and 4 holds. And the average price target comes in at $88 per share for an upside potential of about 17.5%. Looking at our recent ratings down below, once again, a lot of 5-star analysts weighing in. Our low-end price target is a hold here with an upside of 4.5%, and our high-end price target is $115 for an upside of 52%. If you've made it to our third stock today, this is your reminder to make sure you hit that thumbs up button. Third on the list, we're looking at Natera. Trading under the ticker NTRA, the stock has grown 75% year to date and has climbed nearly 27% in the last 3 months. Their 10 out of 10 smart score comes with increased hedge fund activity, insiders buying up shares, and very positive crowd wisdom. Natera is in the biotech sector. They are focused on the development and commercialization of cfDNA, or cell-free DNA, testing kits. These are DNA test kits designed to be minimally invasive, using the fragments of DNA that occur naturally as free-floating entities in the bloodstream. There are many types of DNA that can be found in the bloodstream, and their cfDNA technology captures and measures these fragments for a variety of genetic factors. Their lineup of commercially available kits focuses on oncology, women's health, and general organ health. Natera did come out with a narrower than expected loss when they shared their first quarter results back on May 9th. For their Q1, they reported a loss per share of 56 cents, which was better than the 70 cents anticipated. They also achieved positive cash flow of approximately $3 million and generated total revenues of $367.7 million. That increased 52%. Their CEO noted that they had an excellent start to the year, driving robust volume, revenue, and margin growth, and achieving cash flow break-even earlier than expected. They continued to deliver on their mission to transform disease management with the launch of highly differentiated products in women's health. Following that first quarter earnings report, we did have a 5-star analyst from Craig-Hallum who assigned a buy rating. They said that in nearly 25 years of following the diagnostic industry, we have rarely seen a company execute so efficiently on so many fronts in such a short period of time. While our positive outlook is far more about the long-term opportunity than it is a trade around the news call, we do acknowledge that there are potential catalysts that could drive the stock. With 13 current analyst ratings, the Natera stock comes in as a unanimous strong buy. And with an average price target of about $120, that would imply an upside potential of over 9%. Looking at our most recent ratings here, we have a lot in those mid-teens. On the low end, we do have a buy rating back from February with a downside of 13.5%, and our high-end price target comes from TD Cowen with an upside of nearly 25%. So there we have 3 10 out of 10 stocks all coming in with a strong buy consensus from Wall Street. Let me know your thoughts on these companies in the comments down below. I always appreciate hearing from you guys. Of course, please keep in mind these videos are never a suggestion to buy or sell any specific stock, so please make sure you always stick to your own investment plan. Thank you guys so much for watching. I hope you have a great day, and I'll see you back here next time.